Alright, so daily recap starting off on oil. Honestly, whatever we got going on for the daily, there is some type of downwards delivery that is supporting price and everything. So, could possibly see some highs here in terms of also the 20-day IPTA range and everything like that if you do month 7. As for the intraday idea itself, what was really nice is even though you have 3 a.m. high day template idea for London, by the time you wake up in New York, 8 o'clock, you're already here. It's pretty hard, especially after opening at 9 down here as well. It's pretty difficult to distribute for the next 7 hours unless there's something to drive behind it. So as you're going down to like a 3-minute, you're hitting the sell model here coming off of higher time frame PD array, in this case an order block. Market sweeps this high as well. So 2 turtle soups, SIBI down, as well as hitting this order block here is really just an internal run. So as you're going into that and getting an FVG continue, that's essentially your third drive down, because you already are expecting this low to close and be hit. First break below low is usually a false one. So by the time you're driving through here, you can use that as your second drive, as when you will initially want to buy if you want to. Or if you want to wait for it, in this case you were offered it, you can wait for the third drive. Hits another FVG. So if you're following that rule on the 1 minute, you're at the very least not that early. Now you do get one here, but you have reasons to, at the very minimum, get ready to be bullish or disrespect it, which it does in the next 2 candles anyways. And you get CSD. So you essentially get a bull breaker setup on the second drive. You then reverse, and then you can start playing the same thing again. Look for bullish order flow to come in and actually take it higher. You get FVG on retrace, pushes up. All this is already balanced. Since you have this trading through here, this down here is just to trap people. And this is how you get the trap traders like idea and area. And so when you're looking down there for that third drive, you can look for it to fail. FVG and retrace, run it the other way. Another BISI continuing, order block holding, same thing. Another BISI, order block holding, even though all of this is just an internal run to come back into it. And then 11 o'clock done. It ended up retracing pretty far for the close, but you can do the exact same thing and follow the delivery. Down close that was supposed to hold broke. Also broke here. Up close candles. You can just start playing that and do the exact same thing. And just run it the other way if you want to. Or if you're done, then you're done for the day. Hughes, comical dump at open. I was literally mentioning in my group chat about it. Market trades up, same idea, that FVG push and that FVG back as a retracement is an extremely strong combo, because up there really should be trap people. So when you have that, that can be your SMR. So then that's when you can shift delivery ideas and now start to look for bearish PD arrays to support price. So as you're going into 9:30 open, you have FVGs on retrace. Up close candles closing very, very nice with some hammers. And then they're getting immediately crushed. And then you get the exact same thing. Trades back into an order block. Pretty nice bullish close before market opens. Before it opens. Everyone that's going to trading into the 9:30 candle is seeing this up close candle and thinking, these lows here, double bottom is now swept, I can get in. So now those new longs have now entered the market, and they can be expanded through. I did see it a lot better on the 1 minute, which was like the main reason I sent it, because it really just looked like this, and a really, really clean just LR. And then they used the open to do that. Now as for afterwards, I ended up just doing the essentially bearish order block here during macro. And I got out, I want to say around here for break even. Flash slightly green. So, but as for the reversal and everything, same ideas. Turtle Soup first. Bissy. So FEG and retrace. Even though you're hitting this to be here, and you say may or may not be want to look for lower prices, you're given that PDA rate and it essentially still delivers, but it only is just going to deliver to an area that causes it to change states again. In this case, to change it bullish and continue. So this bearish delivery was still valid in there, but you just want to have that an idea for targets. Many times you will target inefficiencies instead of liquidity. Those are the only two things you can go for. So as you get that move up, and again, FEG and retrace, you at very, very least want to start ruling out shorts, breaking these highs clearly with displacement. Even if you're an OTE trader, you take something off that, or even the swing low down here, and you're getting discount retracement ideas and a way to move higher. And then you get a bullish breaker on that candle. And then same thing, Bissy continue. All this is just internal. This trading up into here, because this was an SMR, this is just a balanced price range. You can, again, get a reaction off that area because it's been untouched, so there's likely leftover orders there. But you will not look for them to be lines in the sand or places that will defend price. Or if you do, because it's untouched, you should look to trade it just to inefficiencies that will cause it to change states and then trade past it. Understand that this happening here and this here is the same thing. I'll let you ponder on that one. US 30, honestly, kind of just sank the entire day. It traded up into whatever was up here from the 830 move. Is the only thing that got the full retracement. And then same thing, macro just trades up as a rejection block and then just thinks stronger than SPX did, or ES. So, as for the rest of the week, not entirely sure what to be looking for yet. I'm open to, honestly, either or. We're at all-time highs. Just keep going. Like, no reason not to. Oil, I'm more inclined to keep longing now. Just because this high should still be hit. And we have really made a deep retracement on people. With the daily, mentioned in the beginning, still being pretty bullish. Because at the very, very least, something is here changing states of it. So even if it wants to trade down into it, like crash into it, whatever, you can, again, you want to see what type of closers do you get on the candles itself. Sell side delivery is matching right up to the sell side delivery. Even though something like this, it's smacking the order block, you can show that it's active in the sense that the close was way past above it. So, anything else? By all means, be sure to like, comment, and subscribe. And I'll see you guys in the next one.